The enterprise AI revolution has reached a critical inflection point. We're looking at a $97 billion market in 2025 that's growing at an explosive 25–30% annually, projected to reach a staggering $1.55 trillion by 2030. But what's truly remarkable is that 72% of enterprises are now actively adopting AI, driven by a proven ROI of $3.50 for every $1 invested. Welcome to the new battlefield of enterprise technology, where the world's largest cloud providers are engaged in an all-out war for dominance in workplace AI. Let's start with the competitive landscape. AWS leads with 32% market share, but here's what's fascinating. They're only growing at 17%, while Microsoft Azure at 22% share is growing at 34%, and Google Cloud at 11% share is growing at 32%. This tells us that market leadership is being actively contested. The October 9, 2025 launches tell the story of this intensifying competition. AWS launched Quick Suite at $20 per user monthly. That's 33% cheaper than both Google's Gemini Enterprise and Microsoft 365 Copilot at $30 each. But this isn't just about price, it's about strategic positioning. AWS is targeting enterprises hesitant about consumer AI tools with their everything you want to do with ChatGPT at work but can't messaging. They're emphasizing enterprise-grade security guarantees that consumer tools can't provide. With over 50 built-in connectors and support for 1,000+ additional applications, they're betting on ecosystem integration and price leadership. Meanwhile, Google is playing to its strengths with Gemini Enterprise. They're leveraging their AI research leadership and TPU infrastructure advantage. Their 32% revenue growth and processing of 980 trillion monthly tokens demonstrate massive scaling capability. Most impressively, 9 out of 10 top AI laboratories use Google Cloud services. That's a powerful endorsement of their technical capabilities. But the competition extends beyond the big three. IBM with watsonx is focusing on hybrid cloud and regulated industries, while Oracle is experiencing explosive 77% growth by leveraging their database integration strengths. Now, let's talk about the strategic implications of this competitive landscape. AWS's strategy is clear: price leadership combined with security-first positioning. They're leveraging their massive existing enterprise relationships and undercutting competitors by 33%. Their focus on data privacy guarantees addresses the single biggest enterprise concern about AI adoption. Microsoft is playing a different game entirely. They're leveraging their Office 365 install base as a defensive moat. With deep integration into the productivity suite that enterprises already use, they're making adoption frictionless. Their OpenAI partnership gives them technical credibility, while their enterprise agreement structure provides commercial leverage. Google's strategy is perhaps the most technically ambitious. They're betting that superior AI models and research capabilities will ultimately win the market. Their dual platform support for both Google Workspace and Microsoft 365 is a clever move to capture organizations with mixed environments. What does this mean for the future? We're entering a consolidation phase where the market will likely settle around 3 to 4 major players. Current price advantages will normalize as features become the real differentiator. We'll see increasing vertical specialization as providers target specific industries with tailored solutions. But this competition isn't just about corporate strategy, it's about national competitiveness. The United States has a vital interest in maintaining leadership in AI infrastructure. We're seeing $500 billion in multi-cloud investment commitments with a target of 71% cloud deployment by 2035. This isn't just business, it's a national priority. The U.S. strategy must focus on 3 key areas: infrastructure investment, talent development, and regulatory framework. We need continued investment in AI infrastructure as a critical national asset. We need talent development programs across all 50 states and optimized immigration policies for AI specialists. And we need sensible regulatory frameworks that ensure safety without stifling innovation. For enterprises making decisions today, the key considerations are clear. Prioritize data safety and privacy guarantees, evaluate integration capabilities with your existing technology stack, consider hybrid deployment options for regulated data, and plan for AI governance and compliance from day one. For investors, the focus should be on providers with clear enterprise traction, proven infrastructure scaling capabilities, and smart vertical market specialization. The ability to navigate the coming regulatory landscape will separate the winners from the also-rans. The bottom line is this: We're witnessing the emergence of AI infrastructure as the new foundation of economic competitiveness. The companies that master enterprise AI delivery today will shape the economic landscape of tomorrow. And for the United States, maintaining leadership in this space isn't optional. It's essential for global competitiveness in the 21st century. The enterprise AI war is just beginning, and the stakes couldn't be higher. What's your take on the enterprise AI landscape? Which strategy do you think will prevail? AWS's price leadership, Microsoft's ecosystem integration, or Google's technical superiority? Share your analysis in the comments below and subscribe for more strategic technology insights.